Hello, I'm Jamie, financial planner at Magenta. This video provides 4 quick financial planning tips for business owners. And these are not technical tips, but are instead designed to get you thinking bigger picture, which you might not do when you have your head down in the day-to-day. So tip number 1, have a plan. If you're a business owner, it goes without saying that you should have a business plan, but do you also have a personal financial plan running alongside? From speaking to business owners, something that has often struck me is how many forget why they started the business in the first place. The answer to why is nearly always so that it can benefit them and their family in the long term. Now, unfortunately, many business owners can often end up becoming a slave to the business, and it can end up getting on top of them, demanding a lot of time and energy. Having a personal financial plan in which you are clear about what you're working towards can provide that light at the end of the tunnel, even when you're having to dedicate more of your time and energy than you'd ideally like to the business. A good financial plan should reinforce in your mind why you do what you do and what it's all for. So quite simply, what's your personal financial plan? Could you explain it to someone? And if not, then perhaps you might need to commit some time to building that financial plan. Now, tip 2, plan your exit. How do you want to exit the business and when? Whether you're prepared for it or not, you will exit eventually. Now, my experience of exits and business sales are mostly in the financial planning world. I've seen numerous attempts at retirement by owners of financial planning businesses who naturally want to sell. Now, it can be done well, but often it isn't. A lot of this is down to bad planning and unrealistic expectations. So whilst the industry or profession you are in may be different, a lot of the potential problems that occur at exit time are not. A good starting point with planning your exit is to consider whether the business has intrinsic value or whether you are the business. If the business has its own value, that's great, and you should consider this a potential source of capital or income for retirement or whatever you do next. If it doesn't, and you are the business, then you need to think about how else you're going to fund your retirement or the next stage. A very simple and tax-efficient way to do this is to put money into a pension ahead of your planned exit. Now, pensions are an allowable expense, reducing your corporation tax liability each year. I did say this won't be technical, so don't worry, I won't go into any more detail on this now. But an action here is to think about whether you could sell your business, how much it's worth, and are there buyers out there? And if so, how would an exit look? Now, tip 3, think about the what ifs. If you can cover off the first 2 tips I've talked about in terms of having a plan and looking at your exit, that's brilliant. But what about what could happen whilst you're still running the business? What happens if you can't operate the business, perhaps because of illness or something happening to your mental capacity? Can it continue to pay you? Can the business continue to function without you? And will this impact on other employees in the business? Have you got locum support or other key people in the business who could step in? Now, in an ideal scenario, you would have the business continue to look after you, your employees and your family if you couldn't work in it for a period of time. It's also important to consider not just illness, but what would happen if the worst were to happen to you. Have you got provision in place to ensure your family know what to do with the business? Would they be looked after, or would they perhaps be forced into a sale? The action here is to think about the what-if scenarios. Are you, any staff you have, and those you care about going to be okay should anything happen to you? Now, tip 4, use experts. As the owner of a business, you are almost certain to be confident in your knowledge and expertise in your area of business, which you know to be valuable. Being a business owner is a busy existence which leaves little room for mastering other knowledgeable areas related to the business, which are important and need your attention, such as the accounts and legal side of things. Most business owners naturally leave this to accountants and lawyers respectively. It's exactly the same principle for your financial planning, but it's something that doesn't always get the same attention as the accounts or legals. Now, we believe that it's best to work with financial planners who understand what you're working towards and what you need the business to do for you and your lifestyle, both now and in the future. And as an added bonus, according to gov.uk guidance, financial planner fees are tax deductible under the banner of professional fees. So just like for accountancy and legal services, financial planning fees can be paid for by the business, making this more tax efficient for you. So the action here is to think about whether you could benefit from expert help. It could be something that has been in the back of your mind that you know you need to speak to someone about, but have been putting off. Now, hopefully you found this video about business owner financial planning tips helpful. If so, it would be great if you could give it a like, comment, or share with your network. And if you'd like to have a chat about your personal circumstances, please feel free to drop me a message. Thanks for watching, and see you soon.